All right, welcome back for the episode of Carnivore Trades. Today is Thursday, February 15, 2024. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So markets here today, a little bit of a gap up and kind of a similar playbook as yesterday if we look at kind of the price action. So gap up, little float here, and then kind of some chop, maybe a minor liquidity grab. And guess what? We back tested 5K. So that was an important level. We talked about that being the line in the sand yesterday. And we back tested that. I thought we might get a little bit more of a pierce, a little bit more of a deeper cut from that. But we only pierced it by like 50 cents on the S&P cash. So not even a dollar or a 1 point, not even a full 1 point move on the S&P cash. But we did back test that, and then again, kind of just like that afternoon float up. I talked about this yesterday, very similar to the bottom from a few weeks ago. Up move, kind of like bear wedge there, and then a liquidity grab, spiked the low, and then we just kind of floated up. So markets are acting well. I want to draw your attention though, just here to this wedge. So we do have a rising wedge on the SPX, and we're just pulling back off the highs right now. We are into power hour. Again, I'm doing the video a little on the early side. It is Thursday, so we do our members live right at 4 p.m. So I want to get this out to you guys now. But either way, the bottom line is we got through that line in the sand. And you're also going to see we got through the 75% retrace as well, which kind of coincided. I talked to you guys about 50-20, 50-25 as a level. And that's where it went. And we had to stall out there for, about an hour or so. And now we're kind of getting through that. So the bears here, you drop the ball, right? So you're running out of time. Your last shot right now is that you have technically still lower high potential, and you have this wedge here that's going to tighten up into the close. So let's just say we just we go sideways or whatever into the close, and we just drift up into that. We have PPI tomorrow. We've got Michigan consumer sentiment at 10 a.m. and we also have the SPX AM OPEX. So maybe we can break down through that. But again, that said, there's still plenty of room for higher lows now. You've now got 50-15. If we get rid of this here, we can go back and just draw in the levels here. 5K, right? Obviously, and even got a bit of level here at 50-10, 50-15. So it's not like there aren't levels here on the downside that could be supportive. Your best chance here is that you get some type of macroeconomic move that pushes the market down, post OPEX. That's kind of what I would say. But at this point, we're through those lines of defense that I talked about, the line in the sand, and market can make new highs. It's really, that's all it has to come down to is, you just go level to level. If the level doesn't hold, that's it. It goes the other way. So bottom line, this trend line. Now, if we break this trend line here, especially if we do put in a lower high, let's just say hypothetically, we come down and we take that trend line out and close below it, I do think the market's vulnerable to more of a correction. And I don't mean like a little, 3%. I mean, like we actually, maybe come down to 48 here, and maybe even deeper than that. But we'll have to see how that plays out. But right now, there's no reason to fight the trend. There's no reason to not give the bulls the upside bias. They've been buying every single dip, and they've been putting in higher lows at every single turn. So now we do have, like I said yesterday, you got momentum declining on the RSI, and you've got a long time in between this hit. Now you've got shorter times in between these hits. So that would be your negative. At some point, this will run out of gas. Eventually, we will have to have a correction. But right now, unless the bears step in here soon, there's really no indication that that's going to happen anytime shortly. What I would say, though, is if next week or even tomorrow or whatever, we test this trend line, this was a 14-day spread. This was 13 days. So let's say we hit it next week after 7 days. That's really going to confirm that there's exhaustion coming into the market. So that's what I'm looking at right now. We did fill this gap here. That's actually not really that bearish. I don't think you actually want the gap to fill. If you go back and look previously, even right here, you don't want that gap to fill right away. You can fill it in 6 months. Same thing right here, same thing right here. Right here, we gap down, gap never filled, right? You can fill it 6 months from now. You don't want to fill it right away. That's usually a sign of strength. So again, we'll continue to give the bulls the upside bias here. And Again, PPI tomorrow, that could be the little wild card. Also, consumer sentiment and obviously OPEX. Some of those supportive flows may be starting to go away. But right now, until proven otherwise, you got to give the bulls the benefit of the doubt. We also have, speaking of rising wedge, there's your triple Qs there. Let me get rid of this line. We don't need that right now. And again, 1, 2, 3, 4 defenses there. Again, it is getting tight, right? It is tightening up, but there's nothing to say we can't go up. I talked about 442, maybe 444, kind of inching up into that area. Nothing to say we can't go up there at this point. So Qs are hanging in there. I will say notably, though, if we look at the heat map, look at what's red today. Microsoft, NVIDIA, Google, Apple, Adobe, Oracle, ServiceNow, Palo Alto, Fortinet, AMD, Cisco. What's green? Everything else, right? Except for, Meta and go figure, Tesla up today. So again, the IWM, we'll talk about that right now, actually. Up 2.65, very close to new 52-week highs. It might need to stall out a little bit here at 205, but weekly looks good. And I like that you had this big dip candle and then a big power up move towards the end of the week. That's a good sign. Why am I bringing all this up? Because, again, it's another one of those rotation type days, right? So Mag 7 down, ARC up 1.88, Tesla, which is Mag 7, but not anymore. Working on inverse head and shoulder trigger, 5% gain there today. That can get up to 210 or so, maybe 215. I think I calculated out if that pattern plays out. So Tesla up, IWM up, ARC up, XBI. I don't talk about XBI all that often, but XBI up 2%. So some of the stragglers, the misfits, the stocks nobody cares about anymore, stocks everybody laughs at, those are actually getting a bit today. Again, bottom line, and I'll say it again, are they going to pull the Charlie Brown, Lucy move again with the Russell 2000? But because we have not seen sustained moves outside of the big squeeze towards the end of the year, which again did not really sustain because we've been chopping around since then. But that's the big question. If Mag 7 comes in, can IWM catch up the bid? Can ARC catch up the bid? Can XBI, some of these other beaten down plays, Tesla, can they pick up the slack? But IWM, a little bit of a double top here. Still some weekly resistance, but I like what it's doing this week, and I wouldn't short it here. Dow here up 1%. Again, that can still go to 390, maybe a little bit higher since we did pull back. The Dow is hanging in there just fine. The SMH here up 5 cents. NVIDIA actually backing off, so down 1.3 again. Has not taken out that high. So under a little bit of pressure. Again, I do think they'll just kind of keep this chopped, maybe between 750 and 700 until earnings, and then we'll kind of go from there. But NVIDIA definitely backing off. That is holding off the SMH. The SOX here is up 20 basis points, just about the same look there. IGV actually down on the day. I mentioned some of those cloud stocks. Look at all the cloud that's red. Microsoft, Oracle, ServiceNow, Palo Alto, Adobe, Synopsys, Autodesk. So all these cloud names, you got Intuit and CRM up, but a lot of cloud names on the weaker side here today, down $1.15 on the IGV. But again, I still think you probably go pierce that double top here, maybe even as early as early next week. Dow Transport's here up 40 basis points. Again, still inside of this red on the daily, but the positive is your trend is up here. The moving averages are starting to separate, and the weekly still has a nice inside bar. So I don't really see any problems with the DJT right here, but you do have that big wide range red bar with volume. So short term, it may need to do some more backing and filling. It may need to firm up a little bit if it's going to move higher here. But again, no real problems to speak of on that front. All right, so flipping over here to rates. So rates are interesting today. The 2-year did back off again. We had retail sales this morning that missed by like a mile, and you can see that missed to the downside. You can see the 2-year here, good spike down on that number, but guess what? Came right back, and we're above the reaction high. That's not a bearish thing. So whenever you have a knee-jerk reaction, then you get back above that high and you stay there, it's usually a good sign. So the 2-year here holding up inside of this green 5s. Now this is the important one, the 10s. So what level is this above? Actually, I'm going to flip over here because I have the lines already drawn in, and I'll just use the TNX. You guys know I've been harping about 4.2 for the last month. We got above it, and guess what? Intraday, look where we went. Basically right there. I think we actually hit it in the pre-market. Yeah, so pre-market we hit it. So again, back test. If that stays above there, this is just going to turn into another bull flag, and then it's going to go higher. So again, not bearish rates, not at all. There's the 30-year backing off, but again, like all the other rates, it did come nicely off the lows, and again, it got hit pre-market and then went right back up. So TYX still strong, 30-year rates still strong. XHB still strong, up 47 cents on the day. That can still go higher. I don't really even have any levels for that right now. VNQ, good outside move. Again, the beaten up plays, stuff that nobody cares about, nobody wants. Getting a bid today, right? Kind of looks like the Russell, right? The big gap down and then the recovery today, so up 2.25 or so. Looks like that weekly is going to get saved. And this is not really bad. I mean, that's a good test candle there on VNQ. This isn't the worst pattern. Like, the trend is still down. You got to get that. You're getting a crossover here with the 20 and the 50 weekly. No separation yet, but tide may be turning here for this, and we'll see. As long as it can stay firm, I think it can hold up, and maybe that weekly pattern can play out, but still has a lot of work to do. XLF here, big day. Outside move. I think Wells had news. Yeah, Wells had news. I'm not sure what it was, but they did have news in the middle of the day. So up 7.5. Look at the intraday big pop right there. And all the banks getting that sympathy, but even like something like JP Morgan was up all day long. So that was getting a bid all day. Goldman, Morgan Stanley, Bank of America, Citi, they're all higher today. So XLF getting a bid. Again, we talked about the 40 handle. Let me get rid of some of these old lines just so we don't get too confused here. But right there, weekly pivot high. So that's $40.01 exactly right there. So that's where this is probably going. And it may even get there tomorrow, but XLF, big move, outside day up. KRE firming up a little bit more. Still the weakest. Regionals are still the weakest, but it is up 3.5% today, which is probably a big part of why the IWM is rallying. KBE up just under 3%. That's back above those moving averages, so that's in better shape now. And then broker-dealers, new all-time highs. So that is a good sign for banks. Up 1 2/3. Also strong today, oil. Oil up 1 3/4. I talked about this being a pivot high yesterday. I still think that's the case right now, but this price action is not bearish. So we had a really good reversal yesterday. Look at this cut, right? Let me just go here. We'll just erase today's action. So you got like this kind of just uptrend, and then it just gets cut really hard, right? Sliced through it. And I said, okay, well, we're probably going to do some backing and filling. We're probably going to go lower. Oil rebounded really nicely today, back above the 200. Again, it doesn't mean it's going to break out tomorrow, but if you just hold up here, maybe put a little bit more time on the clock. Cooking. This is just cooking at 350 right now. It just needs a little bit of time, and it can go higher. Additionally, I talked about this yesterday. It's not that far off of an inverse head and shoulder trigger. If that triggers, it's going to like $90. Again, I still think 84, 86 is kind of your target. I just think there's a lot of resistance up here, but that doesn't mean it can't happen in due time if this triggers. It has not triggered yet. Don't go buying oil because I said inverse head and shoulders. You have to wait for the trigger first and then so on and so forth. But you can see it right there. You can even make a case it's a little wedge there too, which we've talked about with this lower trend line. But oil is acting well. What's also good for oil is XLE today, up 3%, big move. We've been talking about this pattern. I said, hey, if this just stays firm here, this is going to go up, a little zigzag up. 87, a lot of resistance up there, but good move. Take a look at XOP, guys. Wedge breakout, almost up 4%, testing the 100. Again, a lot of resistance at 140, 141. I talked about that yesterday, but good price action here. OIH also getting an outside bid up 3%. Took some profits on this today. By the way, look at the RSI. So this is telling you here, momentum, up, up, up. And finally, you got that higher low, and it's getting a good outside bid. This breaks that trend line. This can go a lot higher. So again, I still continue to like OIH, and it's acting well right now. Uranium here, CCJ, just kind of flirting with these lows. Again, I don't want to see a close below 41.95 by tomorrow. So I'm going to just put that. I'm just going to get rid of that line because this one to me is more important right now because this is the breakout candle and it's a weekly, obviously. So we're going to say right there, we're sitting right above it right now. If it closes below, there's a case to be made that you're in CCJ is in corrective mode. So that's really how I'm looking at that. However, URNM is still acting really well. And that's still well above that breakout candle. In fact, there's still support at 50 bucks, even if we got there. This can just go sideways and build up another base for another trend leg. There's nothing wrong with uranium here. But CCJ looking like it's backing off a little bit. Nat gas continuing down, although it is only down 1.3% today, which is basically flat for nat gas. It is starting to. It does look like it's stalling out. We got inventories today. I know everybody's curious about nat gas. We got inventories. Had a nice recovery. Got above the reaction high and then came back down here. But it is noteworthy that it's kind of going down straight here, and you're noticing like it had less of a cut today. Right, so maybe momentum declining here on the sell side. I still would prefer a straight down move at 9 in the morning to move away from these moving averages, but or you can put in higher lows and then go from there. If we don't bottom today or tomorrow, I would expect that it probably won't be until Monday or Tuesday. Just generally, nat gas just does not bottom on Friday, but it is still languishing. It still is basically at historic lows, which is pretty insane. Dollar index here. So that backed off a little bit, but came off the lows like yields did. It came back a little bit towards the middle of the day, but finished off the lows there. Again, I don't see any problems with it right now. If we close back below 103.50, that would be problematic. But right now, dollar still holding up, but it did back off a little bit today. This is obviously going to trade positively with yields. Gold up a little bit today with the dollar weakness. It's holding this 100 MA. I still think we're going down as long as yields remain strong. Silver got a nice bid, came off the highs and then came back up. Again, I still think this is not quite ready here as long as yields remain strong. But it had a nice bid here, and it's holding this trend line, so we'll give it the benefit of the doubt. Platinum also having a nice day, up 1%. Palladium following through, up about 2.5%. It did come off the highs, though, there as well. But as you guys know, that is not really much of a concern. I've been bullish on it. Now, copper up 1.5. This is negated now. So no head and shoulders on copper. So it looks like they spiked liquidity there, and this can go higher. I don't even have a level for this. I'm just going to say, we'll say 390, okay? So we're just going to say 390 for now is where this might go here in the short to medium term. Doesn't mean it's going to go there in a straight line. But look at this. Look at this. Look at the moving averages and look at price. I mean, they're as flat as you can get. Look at all of them. They're all pointing sideways. You can take a line right here and go sideways to each and every one of them. So no trend there. But I would say 390. We'll give it the upside bias until proven otherwise. All right, Bitcoin still acting well, though it did pull back off the 52K handle. So I said it might pull back there. It might stall out, and it is. So again, there's nothing terrible, nothing wrong, but nice little fade there off the highs coming back in. A little bit of a tail candle there on the daily. Again, we'll see. Support here is going to be around 48, 48.2. If that doesn't hold, that could be a little interesting because it might be like a failed breakout. But right now, I mean, it's on breakout, so we'll just let it do its thing. But it does need to stall here at 52, and it's doing that right now. For how long, I don't know. Bitcoin has this tendency to just, when it goes, it blows through every level. And if that's the case in this, if that's this type of move, then it might just do that. But 48K, 48.2, maybe even 47.5 would be kind of your next levels on the downside if it pulled back there. On the upside, I don't know. Your next macro level is probably 60,000. So right up in that area. But Bitcoin's still acting well and looks good. All right, so again, it's about 3:15. So let's see, we pulled back off those highs a little bit. So watch this in the close. We got 45 minutes. Where's that? There it is. Watch that wedge. So, and we did kind of just sneak below it a little bit here. I'll just defer decision until tomorrow, unless we just puke out in the next 45 minutes. But again, PPI tomorrow, bears, you got to do something here. You got to either have a lower high, or your best case is that we take out the highs, and then you get kind of a divergent high into next week, and then maybe NVIDIA earnings takes it down. But again, watch this trend line. If we hit that next week, it could be a sign here. Momentum's really declining, but right now, kind of had to hold 5K, and you didn't. So Again, give by the dip, the upside bias till proven otherwise. So anyways, guys, gonna wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.